You're not investing, you're gambling. And your ego is placing the bets. Here's proof. You check your portfolio 15 times daily. You buy high, sell low, chase trends, follow Reddit. That's not investing. That's gambling. And your ego is bankrupting you. Let me prove it. Seneca wrote, "We suffer more in imagination than in reality." Translation, your fear of missing out costs you more than any market crash ever could. Let me show you what ego-driven investing looks like. You say you're diversifying, but you bought 7 different cryptocurrencies last month because you saw them on TikTok. That's not diversification. That's FOMO-driven weakness. You say you're doing research, but you spent 3 hours watching YouTube and bought the stock everyone was talking about. That's not research. That's following the herd because your ego needs validation. You say you're investing for the future, but you check your portfolio 17 times daily and panic sell when it drops 2%. That's not investing. That's gambling with your emotional state as collateral. How many times this week did you check your portfolio when you should have been working? Seneca saw this exact pattern in ancient Rome. Wealthy merchants who had everything, but couldn't control their emotions around money. Historical accounts record that Marcus Licinius Crassus, Rome's wealthiest man, made his fortune through patient, rational investing in real estate. Then his ego got involved, needed to prove he was the richest, started speculating on high-risk ventures, died leading an unnecessary military campaign, driven by ego, not strategy. That's ego-driven investing, having discipline but abandoning it for validation. These weren't stupid people. They were emotionally undisciplined people, and emotional weakness destroys portfolios faster than any market crash. Sound familiar? Let me prove it to you. How many times this month did you check your portfolio during dinner? While driving? At 3 a.m. when you couldn't sleep? Buy something because everyone's talking about it? Sell something in panic because it dropped 5%? Feel intense anxiety about money you won't need for 20 years? What about important decisions? Choosing investments based on fundamentals, reading annual reports, understanding business models. I don't have time for that. You're not investing. You're gambling. You gamble for the same reason people gamble in casinos. Not for money, for the feeling, the anticipation, the hope, the what if I'm right? That's ego, not strategy. Seneca wrote, "He who is brave is free." Translation, you can't be financially free until you're emotionally free from your ego's need to be right. And right now, your ego owns you. Here's what ego-driven investing does to your wealth. Weakness 1. You need to be right more than you need to be rich. You buy a stock at $50, it drops to 45. Rational investor evaluates fundamentals. Is the business still solid? Hold or buy more. Ego investor can't admit mistake. It'll come back. I'm right. The market's wrong. Holds until it drops to 20. Sells at massive loss. That's not patience. That's ego refusing to admit error. Cost, 40% of your investment. Gone. Because you needed to be right. Weakness 2. You chase performance instead of building systems. You see someone made 30% on Tesla. Your ego screams, I should have done that. So you buy Tesla at the peak. After the run-up, it drops 15%. You panic sell. Meanwhile, the person you envied, they bought 3 years ago and held. That's not investing. That's envy-driven impulsiveness. Cost, 15% loss. Plus opportunity cost of what you could have invested in instead. 2 weaknesses down, 2 more to go, and the next one. You're probably doing it right now. Weakness 3. You confuse activity with progress. You make 17 trades this month. Check prices 40 times daily. Active investor. Warren Buffett made one major decision this year. Outperformed you by 40 percentage points. Activity feeds ego. I'm doing something. I'm an investor. But activity isn't progress. It's expensive distraction, cost, trading fees, taxes on short-term gains, opportunity cost of time wasted. You're bleeding wealth to feed your ego. Seneca wrote, "We are more often frightened than hurt, and we suffer more in imagination than in reality." Last weakness. This one makes all the others invisible. Weakness. 4. You seek validation, not returns. You join investing Discord servers, subreddits, Twitter spaces, not to learn, to feel like you're part of something. When your pick goes up 5%, you screenshot it, post it. Look at me, I was right. When it drops 20%, you delete the post, hide the loss, pretend it didn't happen. That's not investing. That's using money to buy social approval. Cost. You're optimizing for ego, not wealth. Every decision filtered through what will people think instead of what makes sense. Stop. Here's what most people don't realize. You're not going to fix this by trying harder. That's what you've been doing. Trying harder, using willpower. I'll be more disciplined. And you're still checking prices at 2 a.m. because willpower doesn't beat ego. System beats ego. According to historical accounts, Seneca accumulated massive wealth during one of Rome's most volatile periods. Political assassinations, market crashes, wars. Never once panic sold, never once chase bought. What did he have that you don't? A system, not willpower. A system. And that's what I'm about to show you. Seneca had a practice he followed for every investment decision. Before buying, before selling, before panicking. He called it the rational investor protocol. It's simple, brutal, and it will expose every ego-driven decision you make. Here's how it works. Before any investment action, you ask 5 questions. Write them down. Answer honestly. Question 1. Am I buying this because I understand the business or because I'm afraid of missing out? If the honest answer is FOMO, you don't buy, no exceptions. 90% of your worst investments fail this question. Question 2. Would I hold this for 10 years if the market closed tomorrow and I couldn't sell? If the answer is no, you don't buy it. Warren Buffett's rule. If you wouldn't hold it for 10 years, don't hold it for 10 minutes. Your ego wants quick wins. Wealth is built on long holds. Question 3. Am I checking the price because I'm gathering new information or because I'm anxious? If it's anxiety, close the app. Walk away. Seneca checked his investments quarterly, not hourly. You checking 17 times daily isn't diligence. It's emotional dependence. Question 4. If this investment goes to 0 tomorrow, will I be financially ruined? If yes, your position is too large. Your ego is risking money you can't afford to lose. Cut position size in half, then half again. Ego wants big bets. Rationality wants survival. Question 5. Am I about to sell because the fundamentals changed or because I'm scared? Fundamentals changed? Sell. Company's broken? Exit. You're scared because price dropped 10%? Hold. That's ego, not analysis. That's it. 5 questions. Before every decision, Seneca used this. Became one of Rome's wealthiest. Warren Buffett uses a version of this. Became one of history's greatest investors. Not because they're smarter than you, because they have systems that remove ego from decisions. Here's how you implement this starting today. Step 1. Write these 5 questions in your Notes app. Step 2. Before any buy, sell, or portfolio check, read all 5. Answer honestly. Step 3. If you fail any question, you don't take that action. No exceptions. Step 4. Track your decisions for 30 days. You'll see your ego trying to rationalize exceptions. Step 5. After 30 days, review. Which decisions did the system prevent? Calculate how much money it saved you. That's it. 5 questions. 30-day commitment. Simple. But your ego will hate it because your ego wants to feel smart. Make moves. Be active. The system demands you be rational. Stay still. Be patient. Most investors can't handle that. Here's what happens when you follow the rational investor protocol. Week 1. You realize how often you check prices for no reason. Your hand reaches for your phone. System stops you. Am I anxious or gathering information? Answer, anxious. You close the app. First win. Week 2. You almost buy something because everyone's talking about it. System asks, do I understand this business or am I FOMO driven? Answer, FOMO. You don't buy. Stock drops 20% the next week. System saved you. Week 3. Market drops 5%. You panic, want to sell everything. System asks, did fundamentals change or am I scared? Answer, scared. You hold. Market recovers in 2 weeks. Wealth preserved. Week 4. Zero emotional decisions. Your portfolio is stable because you stopped ego-driven losses. Month 2. Your anxiety about investing drops. You check prices once weekly. You're sleeping better, working better. Month 3. You're not smarter. You're just not ego-driven anymore. And not gambling is how wealth compounds. Here's what people won't tell you about rational investing. When you start using this system, people will call you boring, missing out, not a real investor, or scared. Let me be clear about something. People who gamble want you to gamble too, because your discipline makes them uncomfortable. Your ego-driven friends making 17 trades monthly, they need you to validate their chaos. When you stop, when you build systems, when you're rational, their ego interprets your discipline as judgment. It's not. You're just not gambling anymore. Seneca wrote, if a man knows not to which port he sails, no wind is favorable. Translation, stop listening to people with no destination criticizing your map. You don't owe anyone emotional investing. You're not boring for being rational. You're building wealth. Seneca died one of Rome's wealthiest men. Know what he left behind? His wealth, his philosophy, his system of rational decision-making. The emotional gamblers he wrote about? No one remembers their names. They died broke, chasing status, driven by ego. Here's your choice. You can keep checking prices at 2 a.m., keep FOMO buying, keep panic selling, keep gambling, or you can build a system. Follow 5 questions, become rational. Most people will keep gambling because admitting ego drives your decisions hurts. Few people will choose rationality because they'd rather build wealth than feed ego. Which one are you? If you're ready to stop gambling, write this in the comments. I'm investing rationally. Not I will invest. Not I want to invest. I'm investing rationally. Present tense. Starting now. This channel is for people who want wealth, not validation. Next video, why you're not generous. You're buying approval with money you don't have. Seneca built wealth during political chaos and market crashes. You're implementing his system now in 2025. One final question. Are you strong enough to admit your ego is bankrupting you?